on Australia's business channel. This is Mediaweek.
Hello, welcome to the program. Ahead, earnings frenzy. A host of companies reporting from Seven West Media to Seek. We look at what they're saying about the outlook. The NRL TV rights deal signed and sealed, but have Nine and Fox Sports paid too much? And as How's That draws big audiences for Nine, we find out whether the drama really depicts what Kerry Packer was like. First though, to Fairfax Media, which today has come out. It's written down the value of its assets by $2.8 billion, resulting in a full year statutory loss of $2.7 billion. The CEO, Greg Hywood, says that the short-term outlook is bleak, saying that sales so far in the current financial year are already down 10% on last year. For analysis, we're joined by our co-host, James Manning, the editor and publisher of Mediaweek. James, you were there at the briefing. I mean, there has been a lot of speculation that Fairfax will have to close the print editions of the Sydney Morning Herald and The Age. What was the tone of the briefing like? What did you hear from Greg Hywood?
Yeah, it was great to get an update from him. He's been on the show before, but a lot of that speculation, of course, often in the pages of their competitors. So it was great to hear, you know, the CEO's reaction to it and really, you know, what is their commitment to their existing business model, I guess.
And you actually spoke to him after the briefing. Here is
awesome.
that interview with Greg Hywood.
Greg, the size of the write-down surprised some people. Was that any sort of commentary on the outlook for the future?
No, James, no commentary on the outlook. I mean, basically what it reflects is a difficult trading environment at the moment, and our judgment that we don't want to manage the company based on wishful thinking. We just don't believe that there'll be an upturn in the next couple of years. So on that basis, we took a very conservative view.
You repeated your sort of commitment to print, but there's always sort of a but at the end of it. Does that you're a bit more sort of reticent to give a long-term outlook there, more than a couple of years?
No, we believe that there'll be print around for a long time, and that, you know, it's our commitment to give our customers a newspaper if that's what they want. When I sort of talk, but however, when I talk about the mastheads, you know, I'm reflecting the fact that, you know, many people access our journalism. 70% of people access our journalism through digital means, and so what we're doing is that we're managing for that world where we provide people a mix of print and digital journalism in whatever form that they want. And people try and speculate that means, because we're embracing a digital future, that we're moving away from a print past. That's not the case. We'll be in print and digital and some form of that, and that will change over time for a long time.
Total digital revenue still under 20%, so that would seem to indicate you need to be in print for quite a while.
Oh, look, there's great revenues in print. Just in the metro businesses themselves, The Age and the Sydney Morning Herald, is something in the order of $500 million worth of print revenue. So we're not walking away from that, and we're not walking away from our audience who want a newspaper. So yeah, we're committed to print for a long time, but we'll also with an eye on the future, making sure that we have digital offerings for our customers.
Well, the introduction of the smaller compact editions of the Sydney Morning Herald and The Age, will that sort of coincide with the metered system for access to the website?
Yeah, it will be very virtually at the same time. We believe a compact edition is more user-friendly. We believe it's the newspaper of the 21st century, and we have done a lot of research into this, and a majority of our readers would prefer that format. So we're very excited. You know, we've got a team there designing the new Age and the new Sydney Morning Herald as we speak, and we're pretty excited about that.
Have you seen any dummies? How do they look?
I'm a big critic. I've done this before as my day job, redesigning newspapers, so it's pretty hard to get through me.
Yeah, well, you'd be excited about that.
Yeah.
The application for redundancies closes this week. There's been a bit of commentary that they might be oversubscribed. Can you update us on that, and what happens if it is?
Look, we're making a judgment. We believe that our redundancy scheme will be entirely voluntary. That there won't be any involuntary numbers there, or if they are, it'll be a very small number. you know, we're making a judgment. We've got a target that we've committed to, and we'll just reach that target. If there's any other numbers that come out of the business, that'll be a matter of mutual agreement.
But you think you'll reach that number, okay?
Oh yeah.
All right, James, just another thing I want to ask you about, because we know the public criticism that the major shareholder, Gina Rinehart, has had in her push for board seats that have so far been denied. Was there much mention made of that at the briefing today?
Didn't get much of a run today, and it's sort of, Fairfax is probably happy maybe the story's finally moved on a bit. It's more, you know, examining the business model, the future of the business going forward, as opposed to sort of boardroom ructions, if you like.
All right, let's move on to some of the other media companies reporting this week. Seven West Media unveiled a full-year net profit of $227 million. The new CEO, Don Volti, who took over from TV stalwart David Leckie in June, delivering the results. James, you're also at that briefing, and this all coming as well as there was a host of new announcements in terms of directors and the new chief operating officer as well. How did Don Volti fare compared to David Leckie?
Well, look, it was a very different results briefing, if you like, because you know David Leckie puts on a bit of a show, and he's a very funny person to watch, and his manner and everything. But Don Volti's sort of very different person. And they're both enjoyable performers, but I think a lot of people were impressed by Don Volti and how he held it this week. His senior executive team shared the sort of stage with him. They all seemed very relaxed. We probably got even a little bit more detail out of them than we had in the past, and Volti was very forthcoming about quite a number of different areas of the business.
We'll hear that in a moment. Just on those appointments, though, that three new directors.
Ryan Stokes was one of three new board members, sort of officially sort of anointing him, if you like, as another rung up the ladder. They can't be accused of rushing him into the business, because he's been working on different parts of it for a long time now, so certainly well experienced in what Seven's doing. Rowan Lund been made the Chief Operating Officer. Talked to him after the briefing. He's very excited about the possibilities, going to work a lot on the synergies and the strategy going forward. A
lot of focus, of course, on the outlook for the ad market and what Don Volti had to say about that. Here's some of what he had to say.
I'm very proud of what our employees and our sales department have been able to pull off in television, in magazines, and in newspapers, as well as the digital. It's been a very tough go. We're getting premium above our ratings, so it's very good. The problem is it's just very thin. When you talk to the major advertisers, they can't give you a 6 to 9 month outlook. They basically can give you about a 30-day outlook, and with that, we can't really plan as much for the future as what we would like to do.
What else did Don Volti have to say about the different divisions, the TV, the magazines, the newspapers, and Yahoo 7?
Yeah, the television, Tim Warner got up and talked a little bit about that. They're having a massive review of their news operations, so that's sort of underway now. He sort of hinted that there'll be an even stronger focus on local news, something that Seven, thought to do pretty well, but they're going to sort of drill down into that. And he said their newsrooms will operate very differently next year. Talked about, they're expecting another great start to 2013, My Kitchen Rules. The tennis. They're working on a pretty big format, which he didn't really want to talk about too much, but they think they found something else, probably the calibre of My Kitchen Rules, that they'll unwrap for next year.
Okay, and looking through magazines, that's been a good performer for the business.
Yeah, but it's been under a lot of pressure too, though. But where they did shine was in their cost control. They sort of outshone all the other divisions in keeping a great handle on costs. So Nick Chan did very well there. They've done some interesting things with digital initiatives. I think Men's Health have got an app out which is doing well, but Pacific haven't really, spent big on going down that digital driveway, if you like, and sort of thinking that will be the answer to their problem. So they're very cautious, and again, that's part of that cost management thing.
And what about the newspaper business and Yahoo 7?
Yeah, newspapers, again, they talked very, very tough outlook, very little visibility going forward. Some of their classified areas are okay, some others aren't doing well. Displays, again, it's a real, you can only see out a couple of weeks. Monday to Friday circulation, I think we talked about last week, doing very well for them. And we've got an interesting interview with the editor in our magazine this week about how they're, ask them about digital first. They don't want to know about it. They're still very big advocates of print.
And in terms of monetising Yahoo 7, any sort of insights into that?
Rowan said, probably his last results briefing where he's speaking on behalf of Yahoo 7, if you like. But yeah, they're having some massive numbers for streaming of Home and Away. he sort of linked that to some plot lines they've had recently, and he was asked about how they're going to monetise that, and he said, look, it will become more like television in the future. There'll be ads amongst those streams, so they'll monetise it like that.
Right. Of course, also we saw Seven this week miss out on the NRL TV rights that was retained by Nine and Fox Sports. Don Volti actually spoke about that. Here's what he had to say.
We do believe in live sports. We wanted the NRL, but we weren't willing to pay what the winners, I guess you'd say winners, but the people that successfully got the rights. You know, sometimes winners are losers and losers are winners in these type of things. And I would just say that it's a situation you have to be very, very careful what you do, because you have to return to your shareholders on their investment. Yes, we're very happy to look at Olympics, at cricket. I'm sure, you know, Tim knows where my office is, and he comes in a lot looking for additional monies for things like this. But he is a smart man, and he's proved over time that he can put together a proper program that puts it all together. And then the offset benefits for our newspaper. The West gets the benefit of that, as well as on coverage, and also our magazines if they can use that too.
Well, that certainly was a big story this week, wasn't it? Nine and Fox Sports retaining the NRL TV rights for another 5 years. $1.025 billion they paid. Here is what the respective CEOs had to say.
It certainly has stepped up in the time that they've been in control of the game. I think there is no doubt in my mind, being not only an executive on the other end of a negotiation, but also a very passionate league fan, supporter, director for most of my life, that I know the game's in great hands. You know, we have certainly stepped up and paid as much money as we possibly could.
We're absolutely thrilled, just to echo David's thoughts, that the game has never been in better hands, and to have our 5 live games in high definition, the return of Super Saturday, our Monday night football, and we now have a new Sunday night slot. During the Olympics, I think Foxtel subscribers love the whole offering, the multi-channel offering, and especially the iPad app. We now have IPTV rights and some great tablet rights, which we'll be able to exploit in partnership with the ALRC or the NRL.
Well, one concern perhaps that's been raised is whether Nine and Fox Sports have paid too much for the rights. What do you think, James?
Well, you know, it's hard to measure these things. Just on your airtime, you're just going to sell in that programming. Seven did a calculation. They thought that somebody might be able to pocket about $42 million a year, and it wasn't a loss they could justify it. So whether that figure or not's accurate, I don't know. But there is an upside, of course, a brand value that comes with those rights to, you know, helps the rest of the channel along. So how do you put a value in that? I'm not sure. And of course, a lot of people saying, look, Sevens perhaps, and maybe even Foxtel paid too much for those AFL rights. I think the Daily Telegraph had a calculation this week about value per minute, and they think the NRL's a bigger sport now than the AFL. So.
Just quickly to one other result as well out this week, and that was from Macquarie Radio, and we saw their net profit was down about 60% to $2.3 million. A big year though, of course, for Macquarie Radio. The end of the MTR joint venture, buying a Queensland's network, and also then of course the unsuccessful bid for Fairfax Radio. Just looking at this, the impact of the MTR there on costs.
Yeah, I think it was about $5 million from memory. Yeah, so I think this will be the last time it'll appear on their books. They'll be hoping anyway. So that failed. We've covered that a lot, haven't we, over the years? But now they'll focus on their core business, which is those talk radio stations. Talk radio station 2GB and the music station 2CH.
All right, let's just get the share market's reaction to all of those media company reports, and we're joined by Chris Weston from IG Markets. Chris, just firstly, the